Well, as predicted, gold is still in a correction mode. That gives us the chance to talk about my favorite gold producers, my favorite gold developers, and my favorite gold explorers this week. And we're going to start off with the senior producers today. I'm going to give you my two favorite senior producers that I personally like the most. And I'm going to show you one chart that nobody wants you to know, that is almost unknown. Wall Street doesn't want you to know it. The gold mining sector doesn't want you to know it. The gold mining companies doesn't want you to know it. And if you see it, you'll know why. You're going to look at it and you're going to be like, what the actual F? That's how crazy this chart is. Let's go. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Well, Knicks in 6, let's go. I'm on cloud 9, as you can imagine, with the Knicks beating Boston. That counts double, but looking at the gold price, well, all right, now all of a sudden the fun is not so great anymore, but it is the healthy correction that we know about. If we look at the gold chart here real quick, we see we're still above the 50, the purple line. That's important. We're still on top of the pink support zone. That is important. If we break those two, then the yellow lines, that's the next support zone. But right now, all we have to say after last week is we made a new low in the gold price, no denying that. So that's not great. All right, we're still in consolidation mode, and that gives us the time to talk about the senior producers. So when you look at the mining sector, you have the senior producers, which is basically defined by a yearly gold production over 500,000 ounces, but usually people say a million, and a market cap over $1 billion. You reach that, you gain the status of a senior producer. Below that, you have the junior producers, so those are the producers that have smaller production, 250,000 ounces, or even less. Then you have the developers, late stage developers, so they're close to production, they're getting there, they're building the mine already, they're developing the mining plans, and you have the early developers, the senior producers, senior explorers, and the junior explorers. I don't even look at the junior explorers. The junior explorers, grassroots projects, market cap usually under 50 million, penny stocks. We're not even going to talk about those today, so we're going to talk about the senior producers. So those are your Barrick Golds, your Goldfields, your Kinross, your Newmont Corporation, the real big ones, Agnico Eagle Mines, Ashanti, the big ones, the ones that everybody knows, that are the heavyweights in the senior producer ETF, the GDX. And I want to show you a chart that'll absolutely blow your mind. So we got the gold price right here. I'm going to switch to the monthly now. And we're going to go all the way back to 2005. So 20 years. Okay. Let me get rid of the 50 real quick. Here we go. So in the past 20 years, gold, as you can see at the bottom right, rose about 700%. Now, let's compare that performance to the performance of the senior producers that everybody tells you you should invest in as the core parts of your gold mining portfolio. Let's add those and see how they stack up against the gold price. I mean, you think that their share price should be at least as good as the gold price. That's logic, right? Or even higher. Well, here we go. So, Newmont Mining. In the same time, in the past 20 years, when gold went up 700%, Newmont Mining returned not even 13% to shareholders. What a joke. What a joke. Well, that could be a pure coincidence. Let's look at Barrick Gold. How are they doing? Even worse, they're down 11% over the period when the gold price went up 700%. A destruction of wealth. So now you might say, well, Helmy, you're picking out probably the two worst ones, and you're not wrong. That's true, because I want to make this point. Now let's add some other ones. So again, purple line, Barrick, the maroon line, Newmont. Now we're gonna add Kinross, a little better, 123% in the past 20 years, but still nothing compared to the 700 that gold made. Gold Fields made about 100%. They doubled in 20 years. Crazy, right? Here, down here, about 20% is Ashanti. And then we have Agnico Eagle Mines, my favorite. And all right, so that one performed. That one did almost as good as the gold price itself. Look at this. Except, unbelievable, except for Agnico Eagle Mines, which is my favorite among the senior producers. The rest is an absolute disaster. It's an absolute disaster. Now, some of them paid out dividends, that's fair, but that doesn't justify that they underperformed gold dramatically. And if you would have bought gold, not only would you have made somewhere between 70x to 5x the money that you would have made with the gold senior producers, at least most of them, you would have had zero risk, right? You would think if you take on the risk of a gold producer, even if it's a senior, you should be rewarded by more gains because you take on risk. The exact opposite is true. This is the chart that nobody wants you to know. Why? Because they want your money. They want your money in the GDX ETF. They want your money in the big stocks. Why? Because these are the only stocks that the big hedge funds and the big institutions can trade in the gold market. So they need to present a positive image because they need the liquidity of the retail investors in there. That's why you don't see this chart. But that's why you watch hot trades of the day that I show you what's really going on. Investing in the senior producers in 90% of the cases is the worst possible thing you can do. Absolutely terrible. With an exception of Agnico Eagle Mines, which is by far the best and best managed senior producer there is. And that is the one stock in the senior producers where I say, yes, please, I will buy this stock. Here's the chart of Agnico Eagle Mines. And look at the outperformance. Let me get rid of this uptrend here. In the past 20 years compared to its peer group. It's an absolute joke what they did, right? So let me flip from the monthly to the daily so we can see what's going on. Oh, I got to definitely get all this out of here. Here we go. So we are on the daily, as you can see, this is 2025, in a correction phase, which I love because I wouldn't mind buying Agnico Eagle if I can get a good price, all right? So we broke the 2025 uptrend. This one is gone already a long time ago. We broke this support zone last week. Whoop, confirmed, not great. Now, if we zoom out, you can see this rally started after we finished this consolidation phase, which actually tracks all the way back to the summer. So basically from August till January, we were consolidating, we're going sideways, which we like, right? It's consolidation over time, that's healthy, that shows us this is a really good company. So let's add the 50, and you can see we broke below the 50 already. That is not good. So there is no rush for us to buy the stock right now. And if this stock, which is the number one biggest senior producer there is, and as you can see, I just added this long-term uptrend from 2024. You can see it basically has the same trajectory, maybe. Well, it's basically at the same level as the 200-day moving average, the golden line. So this is our target zone. This is what we're looking at right now. And we're looking at these highs right here. Let's just give it another color, then let's do this. There we go. And you can see we have a triple zone right here. And that is where I'm interested in buying Agnico Eagle Mines in this correction, where I would open up a position that I really like. But here's the thing. If Agnico Eagle Mines looks like this, and that's the heavyweight in the GDX, then the GDX is not going anywhere, especially if the gold price is consolidating. So no need to rush. Let's wait patiently. The number one, well, maybe not the number one, discipline is the number one trait that you need to have as a swing trader. But the number two is patience, right? Let's put on our orange Buddhist coats, do some meditating, and wait for our time. And wait for the price to come to us. Does it work all the time? No. But that's okay. It works more often than not. And then we get the really good prices. And this is where I'll be interested in Agnico Eagle Mines, down here at this triple support zone. And that is it for today. I'm going to give you my other senior producer on Wednesday. Also talk a little bit more about my favorite junior producer, as I did last time, Alamos Gold, which is basically a senior already. And then we'll go from there into the real, more juicy stuff, the developers and the senior explorers. So I hope the chart about the senior producers didn't frustrate you too much. It's pretty bad when you see it for the first time. The first time I saw it, I was like, I can't believe that's true. But it's the truth. And that's what we're here for at Hot Trades of the Day. So if you like this video, please subscribe, hit the subscribe button, hit the like button. Help us out a little bit. It takes you a second. You just got 14 minutes of information that you probably don't get anywhere else. At least I'm not familiar with anybody else showing you this chart. So subscribe, and we talk on Wednesday. You don't want to miss it. Now we're getting into the juicy part. What I put on my watch list, why, and where will I be buying. Talk to you later. Have a great start to the new week. Let's go, Knicks.